What's up, guys? It's July 23rd, 2025. Another rally in the markets. Pretty cool day. I didn't get to trade it, but I think starting next week, I'm going to be trading a little bit more in the morning, so I'm looking forward to that. Hope you guys did all right. Could pretty much buy any bar. If you bought up here, you could scale in and you'd make some money. I think this is a tough buy. Climactic price action, new highs, sold off about 50%. So that would be a trade I would have liked to take. Filled right around here. Bears had 3 legs down. Leg 1, pull back leg 2, pull back leg 3, wedge bottom into the EMA, and then a rally for the rest of the day. It's a pretty cool day. Hope you guys had a good day as well. I appreciate all the members and subscribers. I like talking to you guys Discord. It's always fun talking to you guys in Discord and hearing different angles. Got some people trading gold, some people trading ES. I do breakdowns on ES, but I trade NASDAQ. I trade a lot on the after hour session, so I trade NASDAQ because there's more range and it moves a little bit faster. Weekly chart, daily chart. It's Wednesday, right? So if this is a trading range, we are now finally breaking out of it. Yesterday or last week's bar kind of rallied and then we pulled back, and now we're breaking out of that. So this could be the start to a leg 1, and that doesn't mean we're going to rally forever all the way off the screen. We could have the next couple weeks, we could have trading range bars that also give us leg 1 and leg 2. Trading at all-time highs, so pretty cool time. And yeah, here's the daily chart. Give me 1 second. Now we have this rally here. Ends up being a bull flag, the breakout. Remember the bullet in the box analogy? You shoot a bullet into a box, and the trading range is less than 20 bars. So let's say this is the bullet. I'm just eyeballing here, but this looks like less than 20 bars. It's about 10 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So bullet in a box, you shoot the bullet in a box, it still has momentum. And now that momentum is getting spit out in the same direction. Today's bar was a nice close. What's interesting about today's bars on the daily chart, weekly chart, they look like great looking bull bars. But we got a chance to see the internals of it by trading the lower time frames. And what we do know is it started off with a sell-off. I think that's interesting because no, actually, you know what? It was a gap up and a deep pullback. So we could say spike, we could say spike, deep pullback, and channel. What am I trying to say? The stock market is fractal, and there's different types of ways to see the market cycle. So one way we could say spike and channel, and we start channeling higher. That's definitely one way. Another way you could say is trading range behavior, right here. Break out of the trading range, deep pullback, and then we have multiple legs higher. However you want to call it, it was somewhat of a small pullback, bull trend day. I still don't like the opening for a small pullback bull trend day, but it happened. Bears that saw this wanted a second leg down, so they're going to be constantly shorting. Maybe they short up here, maybe they short down here. They get trapped and have to buy back shorts. While bears are buying back shorts, bulls are buying pullbacks. They're buying here, they're buying here, they're buying here. Bulls are buying where bears are getting trapped. And you see how like a new high is here, bull buys that, and he has to average in. These new highs are good for trends because it's forcing traders to be trapped out, so they get FOMO and buy the market, and they have to average in. The bulls get FOMO. So that tension between bulls getting FOMO, bears getting trapped is what causes small pullback trends. We're price action traders, so we understand the market cycle, and we know, and we study probabilities. We trade around the probabilities. We know after 3 bars, the probabilities for pullback significantly go up. And I'm going to do it. You know what? Let's just really quickly see how many times a pullback happens. It could be a visible or a fractal pullback. 3 bars. There's a small pullback here. 1, 2, 3. Small pullback. Or right here is pullback. 3 bars. Deep pullback. This is trading range bars, so you could say there's pullbacks happening. But if you want to count all the bull bars, 19 is that pullback, and there's that leg 1. 3 bars in the pullback. 1, 2, 3, 4, 5. 5 bars, it pulls back, and there's pullbacks within here. So fractal pullbacks are already happening before the 5 bars. 2 bars pulled back, 1 bar pulled back, 1 bar rallied. 2 bars pulled back, 2 bars pulled back. 2 bear bars, and this was what it looked like a pullback, but then it ended up breaking out, trapping bears. So then we have 1, 2, 3, 4, 5, 6 bars, and then the pullback. This, you could count this as a bull bar, but there's no body. And then we have 2 shallow bars, 3 bars pullback, 3 bars and a deep pullback. So this could be one leg, that could be the pullback, and then rallies. 3 bars, and then this even though this is 3 bars, this pullback goes below here. So I really wouldn't try and trade that for a 50% pullback. If I did, my stop would have to be down here. I think I might get stopped out. Anyways, 3 bars and a pullback. So we're price action traders. We understand the probabilities. And after 3 bars in a row, the chances for after 3 bars in a row, the chances for a pullback go up. So we have a gap up, bar 1, bear bar, bar 2 ends up being a pullback for bar 1, sells off 3, 4, 5, and 6. On to get a second leg down. The problem is there's a fractal pullback with bar 5. It's a pause bar. It is a bear bar, so there's still momentum, and that momentum starts to go sideways on bar 6, 7, and 8. Bar 6 has a tail. 8 is a bull bar. 9 is a bull bar. Let's do some trap analysis here. So bulls buy here. They're gonna buy more lower. Look at where 12 stopped right at the 50% mark. Sold off. Problem with this is if you're looking for that leg 1, leg 2. Leg 1, pull back. Leg 1, pull back. Leg 2, pull back. Leg 3. I think this was a fractal wedge bottom on a lower time frame. We can do the opposite analysis and it would work nicely. Look, hold on. This always takes me a second. Oh yeah, bar 9. So bears are getting short, hoping for a reversal down, and the market rallies. Look at bar 12. Bears are shorting under bar 3. It's resistance, and they're shorting there because it's resistance. They're hoping for leg 1, leg 2. That's where this breakout started, and they're shorting there to get out at break even. Bears make a point on 13, but then they buy back shorts, and then you catch that leg 1, leg 2. Leg 1, pull back, leg 2. This is my favorite time to trade because now the pullbacks have started. Of course, this time of the day, we don't actually know this to be a small pullback trend. But now, let's say like we're right here, and I do this all the time on the overnight session. So what am I trying to say? Here's the first setup, pulls back. And now this pullback, the break-even bar for these bar 9 traders, the bear's trapped. So now we do it again. Because bears, this is an emotional bar. I'm sure there's a bear that shorted that. And then look, you get filled. So the rally's here. You're smart and you're quick enough to put your entry right at the 50% mark. You get filled on 19, sit through a small drawdown, 21, and then you start to you see profits by 22, 23. You hit your 1 hour target, depending on where you take profits on 23 or 26, and then the process repeats itself. 21, 22, bears are getting short, and then look at the tails on 25 and 26. It's right around the 50% mark because that's the break even, and then you get your leg 2 pretty quick with 27, 28. Do it again. See, this is why I really like this system. Bears are getting short on 26 and 20. What is that? Oh no, 25 and 26. They see 3 pushes up. Leg 1, pull back leg 2, pull back leg 3. They're betting on a wedge top. They don't understand that we're in a bull regime. They don't understand that the weekly chart has bullish pressure. There's a gap there looking for leg 2. They don't understand the bullet in the box analogy, but you guys do. Bears get short down here. Now they're super trapped and they're trying to get out pretty quick here. Look at the bears that shorted the high of 29. Maybe they're able to take a small loss on 30's tail, but then it rallies again. So they do it again. And look at so they short here, but then look at 31's tail. It still doesn't hit the 50% mark. So now they've doubled their position twice. They need to get out or hit out quickly. And then they short again once they see an inside bar 31 betting on a reversal above the trading range. Boom, they get their break even. They barely make a point, maybe on 35, 37. But nonetheless, they get out break even. And this trap here, this rally ended up being a 1.5 bar move. I don't trade one. I only go for 1-to-1s, but I took a decent hit last night, and I got to do another back test on when to go for 2-to-1. I have a feeling I already know when, but I just want to see the numbers I'll give you guys a hint. It's when there's a good gap. I should go for 2 to 1 or at least 1 to 1. When I say one, so hold on. Okay, I might sound confusing here. This is a 1 to 1 trade because I put my entry here, stop down here, target here. But maybe if I see a gap, I may go for one. Let me change this color. I may go for 1 to 1 of the actual, and you know what? This should be up there. That's where the spike starts. I may go for 1 to 1 like that. So there's 1 to 1 RR and there's 1 to 1 trading. So this would be a 2 to 1 because my stop would be down here. 2 to 1 RR, but 1 to 1 for the leg. So I hope that makes sense. And I don't know if I'm a scalper, so I really don't know if I just want to start. I don't know. I have to put some thought into that and let the numbers tell me what to do. Anyways, this was a good trap. They were trapped a lot. Bears buy back shorts at 50% mark, and you meet your 1 to 1 on bar 51. Let's do the same thing. I really like this. 36, bears see that. They're hoping this is a climactic move and it's going to sell off. They get trapped again. This bear spike starts on the 40 high. They get filled. You get filled long on 42. Same place these 37 bears are getting out break even, and then you make your money on 42, 43 second leg. Then look at it. Let's see if it worked. This was a deep pullback, so it would work. Bears at short 45 and 46. We know they're shorting because there's a tail on 46. Do it again. Short here. We see the rally. We put it at the top of the spike. And then bang, 53 fills you. And this is my favorite type of trade. A rally or a sell-off. And then a rally. And then we're in profits. And the next couple of bars hit the target. So like if you're in a drawdown for like 14 seconds, bounce off the EMA, found support. Pretty good place to put an order there. Makes sense from an EMA perspective. Makes sense from a mathematical perspective. Bears a trap. Now it's kind of tricky because I don't know if I would use this next trade because we're getting use this next bar 53 because it's getting kind of climactic. But let's just see it for practice purposes. Yeah, pretty big. So bears are trapped down here. There is the unfortunate bear who shorted the low of 53. He doesn't really get his break even ever. So chase the market emotionally. Could try 54. I don't know if I would do that, but there is a bear that shorted 54 because it printed bearish. Not a lot though. There's not a big tail on 57. But then there is a rally. We'd go here. We don't get filled. Since we don't get filled, we know that these bears also didn't get out break even, so they're going to short again. Maybe they short the 59 high if they don't get out. Then they short the 60 and they finally get out, maybe 61. And look here, this rally doesn't hit the target, so I would keep this limit order up. Filled on 68 and then target hit on 78. Problem with this is I don't know if I'd still be trading past bar 72. If I'm in profits, I probably would be, but it really depends because I've been the first 30 minutes and the last 30 minutes are the hardest part to trade. Let's just take a quick peek at the overnight session. Bears that shorted the low here. They're going to short more. So yeah, bears that shorted the low here are now getting filled. This is a good time to talk about this actually because we didn't get to talk about it on this rally up. I'm trying to get better at it. I'm still working on it, but so bears short here, they short higher here, they get out of break even here, but it's taking too long to get out of break even or to get that leg 1, leg 2, leg 1 pull back, leg 2, and what that tells me is it is a trading range just visually, but bears made money here, bears made money here, bulls made money. So this dynamic, this trade might work, but the context for a leg 1 pull back, leg 2 isn't as strong as I would like it to be. This is a good example. Remember this trade sold off and then rallied. That's what I like to see, and that's not here. So we know that bears are willing to hold their position instead of buy back shorts. So yeah, hope you guys had a good one. Pretty cool day. Lots of trades if you like to trade 50% pullbacks. Lots of I don't actually know how many 𝐼1R trades there were. I saw this one here. That's one I don't really like. That here's another one. Still catching second legs. Yeah, another one. I'm just eyeballing. I do want to trade the 𝐼1R eventually, and I'm going to make my criteria stricter. I think I know how I'm going to do it, but I got so many back tests I want to do in top of the classes, and yeah, the list just keeps growing. So I hope you guys had a good one. If you learned something, share a show, don't be a hoe, and I'll talk to you guys tomorrow. Have a good night, everyone. Thank you for your time. Bye.